Hey guys, this is Rafael Velasco, aka Rafael the Realtor, and in today's short video, we'll be doing a market recap of the year 2020 of the Chicagoland real estate market. We'll be talking about what happened during the lockdown and how it affected real estate. We'll also be looking at the real estate market post the lockdown or as restrictions started coming off the period April, May through December 1st. And we'll also be reviewing the data and what it could possibly be saying for the year 2021. If this is your very first time here, thank you so much for joining me and spending a couple of minutes of your valuable time here with me. And if you're a realtor, please stick around to the end so you can kind of see what the real estate market here in the Chicagoland area as a whole is doing. And comment below how it's different from your market. All right guys, so the last time that I posted a video was March 22nd, actually in this exact same setting. And it's somewhat amusing, I would say, and almost kind of scary to reflect and see that video because I was pretty much freaking out. I'm sure a lot of other people. I had watched probably 7 or 8 hours of CNBC, CNN, NBC, Fox News, pretty much every doomsdayer on YouTube. And I was pretty much freaked out, right? And it kind of affected real estate in the exact same way. When the restrictions came in, we had a rapid drop of new listings right around the time when we are supposed to hit the most amount of listings to come into the season, right? We have seasonal trends where, March, April, May are supposed to be high inventory. And then July and June are supposed to be peak closings. And that kind of extended everything into later in the year because of the restrictions. Not only that, but we really had very low supply to begin with. And just to go back prior to the pandemic, the year 2020 was really shaping up to be one of the hottest years in the last 6 or 7 years. Real estate was really coming into its groove because real estate was coming down. Real estate interest rates were coming down, and the millennials are actually coming into their peak home buying age. So just to compare Chicago to the whole entire nation, the nation as a whole roughly has about 1 million homes at one time for sale. Obviously, there's seasonal trends, they go up and down. But you are projected to see roughly about 1% listings, about 1 million homes for sale. And currently in our market, in the United States market as a whole, we're actually seeing less than half that, roughly about 490,000 homes for sale. And the low inventory is really causing a frenzy pretty much across the nation. We're seeing multiple offer situations and homes rapidly appreciate in price and being sold well above their asking price. We're seeing escalation clauses. That was a tough one. And people really overbidding for their home, and really who can blame them, because people find their home as an essential, right? When you are told to go home, you're cooped up, you start looking around and you're trying to see how you can better your home situation. Those people that maybe didn't consider that home upgrade, when they're not going to the gym, not going out to vacations, they're looking around and they're trying to see how they can improve their home. And those that are able to, they're probably looking to step up into that home where they can have a study room for their kids, maybe a home office, and obviously a home gym if you're not able to go to the gym. So that really caused a serious frenzy. And in July 2020, we actually saw the peak median sales price of $265,000, up from 2019 of $247,000. And I think that price is amazing. I mean, we had a 7% increase, and it could be because of the coronavirus, but honestly, I think that the real estate market was pretty much going into that trend, and it didn't really affect the market very much. What it did affect was that it pushed the market cycle, or the seasonal trend, to later in the year, when we usually have peak closings in July and June. We're pushing that further back because we had a certain lockdown. We had a lockdown in April, so it pretty much pushed everything back. All right, guys, so we are on my desktop here. Sorry for the background noise. I have a fish tank in the background, which might cause some noise. I'm gonna go through this stuff real quick. So this is our whole entire MLS area. and this is where we're sitting at now. But compared to the 3 previous years, 2017 had about 27,000, 28,000. We had a little bit of the dip here. I think that's when rates changed here. Comment below if you remember that. I think rates changed. But overall here, guys, total homes for sale, I mean, record lows already. If we go to 10 years, it's been slowly dropping since the 2008 housing crash, and now we're sitting at historic lows, right? 10 years of continuous drop in inventory. If we go to new listings here, we had a peak here in 2019, which is a hot market at 26,000. Here's our drop from March. We had a momentary drop from 18,000 new listings to 13 and climbed back up to 23. And if this was a double hump, but if it was just one single, maybe it could have, peaked a lot closer to 2019. Month supply, again, record lows, completely dropped off here in 2019. New listings is one of the things that I was really looking into just to see if I can compare it to previous years here. Let's take a look at, let's say 5 years. Okay, so we have a 5-year trend of new listings coming in. Again, April is when, March, April is when most of the inventory comes in. And compared to the previous 5 years, I would say that July, or the 2020 real estate market here in the Chicagoland area is pretty close to the same amount of new listings. So the reason that this is important is because, I thought, well, how many people are really out there waiting for 2021 to list their property? Are we going to really see, foreclosures and all these people trying to sell their home here in the 2021 spring market with a bunch of inventory? According to the data, that doesn't seem likely that we're going to see a lot of people decide to move here in 2021. I consider it a pretty normal market for listings and homes for sale. Obviously, the median price has started to rise, and if you look at the 10-year, here's the cycle. Let's do rolling 6. So again, this is the whole entire MLS median, and 2020 we had a dramatic increase, right around 7 or 8% here in our market. Let's take a look at something else here. All right, guys, so this is another website that I subscribe to that I really like. This is Altos Research, and they gather information from the MLS as a whole. I think they monitor about 100 million properties nationwide, and I looked up the report for Chicago, Illinois. This is a weekly market action index, pretty much telling you if it's a buyer's market or a seller's market. It seems to be relatively on the seller side, so you're still seeing sellers having the upper hand. Looking at some of this other information here, the only thing that really stands out is that price decrease is staying pretty normal, and that really pretty much says that homes are not coming down in price. Usually about 30% of the inventory comes in overpriced and gets price adjusted. And if homes are heating up, the price decreases drops. And this is also obviously November 27th, which is, we're coming in on slow, the slower side of the season. So median list seems to be higher than last year here, and if you go into inventory, you could see that we are again at historic lows, and this dates back to 2017. Now there's different markets within the market, right? So this is the whole Chicagoland area as a whole, or the city of Chicago as a whole. I'm just looking at days on market here, and the quarters of the homes for sale. It looks like the hottest market in the Chicagoland area is right around that median sales price of 265, 274. Now you're getting days on market of only 80 days, and lower than that it increases, and higher than that it also decreases. So overall, I could still consider Chicago pretty much a very stable market. We haven't had very much of a change in inventory. I know there has been other states and other cities that had a dramatic drop in inventory, and the US as a whole has seen a drop in inventory, but Chicago seems to be pretty stable. It is a linear market, so I expect it to be super stable compared to some of these other markets. All right, guys, so there's a couple of key points that I wanted to mention here before I leave. And one of the things that I think is likely to affect the 2021 market, and something that we should consider, is that in 2020, because of the rapid increase in home price, most homeowners in the US have built $750 billion worth of equity. That is huge. People are able to leverage their home. They're using their house as a piggy bank. You can say that's good or bad. But what it could possibly do is hold those people off from foreclosing on their home, and give them some leverage to maybe pay some bills and give them time to get back on their feet. Another thing that you should also consider is the forbearance program that really started with about 6 million people in forbearance. Now, since then, it has actually dropped to half of that at 2.9 million forbearances, and I expect that to go even further. Again, if about 2 million people, let's just say worst case, in March, they are unable to resume their mortgage payment, they have a lot of equity because the real estate market has increased in price overall. So it gives the homeowner, again, a lot of leverage. Also, another thing that we must remember is that millennials, of course, are in peak home buying age. I probably said that about 1 million times. And ultra low rates. Now, the Fed has already said that they're unlikely to raise rates until 2023. So I expect that to happen unless we see a rapid increase in inflation, where the Fed will have to take some dramatic measures and possibly start ticking up the mortgage rates. If there's super high demand, I can see mortgage rates fluctuating. Again, super high demand, interest rates relatively low. I expect the real estate market to continue its upward trend into 2021. Guys, thank you so much for spending a couple of minutes of your time here with me. Tell me what you think about what we just talked about. Tell me what you are projecting for 2021, what you're seeing in your local market, and tell me if you're looking to buy, sell, or invest in real estate in 2021. Or tell me if you're definitely staying away from the real estate market for the next decade. I just want to remind you, because I know I get a lot of doomsdayers. Real estate market is at all-time highs, and so is the stock market, right? We went down to 17 or 18, down to 17, 18,000, and it has actually surpassed its previous peak. Now, I know that a lot of people might consider it a massive bubble in the stock market, but it does prove that consumer confidence is up and investor sentiment is high. And that is promising, because the real estate market, unlike the stock market, doesn't fluctuate as much, and it's unlikely to be manipulated as much as the stock market. And that's because real estate prices trend up as rates drop or wages increase. And we're going to continue to follow that trajectory, that pattern. Again, unless we see a massive influx of foreclosures or short sales, which I do not see currently, I think the real estate market in the year 2020 is going to be hot, or 2021 was hot. Maybe 2021 is even hotter. We're going to raise the roof in 2021. All right, guys, so thank you so much for joining me. If you have any questions or you have any comments, if you agree, if you disagree, please comment below, and I'll see you next time.